So we have received a couple of emails lately from viewers who wanted to have a clear idea about independent contractor taxes. So in today's conversation, I will be spilling all the beans. I will be talking to you about how to file taxes as an independent contractor. And so I'll be giving you, in essence, the complete guide that you need to have for independent contractor taxation. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to explain to you how to file taxes as an independent contractor this year. So I'll be giving you the steps that you need to follow. But please, I want you to wait until the end of the video because I have a great surprise for you. I have the perfect step-by-step illustration that will actually show you how things are done on an actual tax return form, on an actual tax form. Okay, so this is for the end of the conversation, or the end of the video. But right now, let's start. So here are the steps. Number one, you want to ascertain. So what does that mean? You have to make sure that you indeed qualify as an independent contractor in the eyes of the IRS. The IRS has a specific definition for what an independent contractor is and is not. So what is it? An independent contractor is a self-employed person or a small business owner who performs services for another person or entity. And independent contractors are not employees of the people or businesses they provide services for. They may or may not have written contracts spelling out the services they are supposed to perform and their compensation for those services. So this is the definition, the official definition from the IRS. So who really qualifies as an independent contractor? So basically, when you think about it, the key characteristic of an independent contractor is retaining control of how the work he or she is being paid to do is performed. So with that guideline in mind, there are a variety of careers that offer the ability to work as an independent contractor, such as accountants, freelance writers, hairstylists, lawn care providers, electrician, physician, dentist, attorneys. Okay, so independent contractor status can apply regardless of how your business is structured. You can be considered an independent contractor if you operate as a sole proprietorship, you form an LLC, or adopt a corporate structure. So as long as you're not classified as an employee, you can be considered an independent contractor. This is very important. Okay. Now take note though, if you hire people to work for you in your business, you will have to decide whether to classify those people as independent contractors or employees. And incorrectly classifying an employee as an independent contractor could trigger a tax penalty. So the IRS considers someone to be an employee if the person who is paying them to work can control what will be done by that employee and how it will be done. Okay, so this is really important, and you have to be very clear about what qualifies as an independent contractor versus an employee. So the first step is you need to ascertain. The second step, you need to write off. So let me give you the tax deductions for independent contractors. Okay, now deductions, as you know, lower your taxable income for the year, and independent contractors they can claim them as business expenses on their taxes. So depending on the kind of business you own, your deductible expenses might include advertising costs, business insurance, vehicle related expenses, legal expenses, home office expenses, rent or lease payments, equipment purchases. So you have a constellation of expenses that could qualify as write-offs. Okay, now remember, you have independent contractor tax deductions that will largely depend on what you do for a living. For example, let me give you an example. A freelance web designer may not have any mileage expenses, but he or she could have home office expenses to deduct. Okay, so this is really what it is. It really depends on what you are actually, the kind of niche you're in. Okay, now here are some tax deductions for self-employed individuals. You have deduction for 1/2 of self-employment tax, self-employed health insurance deduction, qualified business income deduction, the QBI deduction, car and driving related deductions, mileage or actual expenses, depending on how you want to do the write-off. You have home office deduction, internet and phone, licensing and fees, and advertising. It's really important to understand that while being an independent contractor means you have to pay more in self-employment taxes, there is an upside. You can take business deductions, and these business deductions will reduce the amount of profit you pay income taxes on. Okay, remember, you will report these deductions along with your income on Schedule C. Schedule C, that's the key form I want you to remember. And this is important. And one thing you need to also understand is that, as I said before, your status as a business, as an independent contractor, does not depend on the legal structure of your business. You can be incorporated as an LLC, but you can be a multi-member LLC, but you can be independent contractor if the person you are rendering services to, that person cannot control your performance and cannot control the type of tasks you do. So this is really important. So step number 1, if you want to file taxes as an independent contractor, confirm your status as an independent contractor in the eyes of the IRS. Number 2, you want to write things off, the proper expenses. The third thing you want to do is you want to estimate. So estimation is very important. Estimating an independent contractor's federal tax liability. Okay, this is a really important. Why? Because figuring out exactly how much you owe in taxes can be a challenging experience, especially if you're new to working as an independent contractor. It's not as simple as setting aside a specific percentage of your income. Some people talk about setting aside 25% or 30% because the amount you will ultimately owe depends on your tax brackets and the deductions and tax credits you may be eligible for. In addition, your estimated taxes need to cover both federal income taxes and self-employment taxes. Okay, so this is the independent contractor's version of Social Security and Medicare taxes. So in addition, in total, we have 15.3%. Okay, so the thing is, for this year, you will pay a 15.3% self-employment tax on 92.35% of your net self-employment earnings, which are your earnings as an independent contractor minus ordinary and necessary business expenses. So this is really important. Now, you might be asking, and we have received a lot of questions about that, why 92.35% instead of 100%? Because the other 7.65% is essentially a deduction representing the FICA tax your boss would pay if you were an employee and not self-employed. So an employer can deduct that tax as a business expense. Okay, this is really important. Now, knowing you have to pay that much on top of your income taxes may be discouraging, but the good news is you can write off half your self-employment taxes as an above-the-line deduction. This is really important. So when we talk about calculating your income taxes as an independent contractor, please make sure that you basically enlist the help of a tax accountant. I mean, on this show, we are providing general guidance, but your situation as an independent contractor and the niche you work in can be very different. So we cannot give specific advice unless you ask us. You can ask us in the comment section, or you can send us a private email. We can reply to you, but it's always important to enlist the help of someone who knows your industry, has helped other independent contractors in the past, and has a clear idea of what you do and what kind of deductions you can claim. Okay. Now, if you need help calculating your estimated payments, you want to use the IRS form 1040-ES. Okay, or you can just go to the IRS website and you can try. They have an income tax calculator. Okay, or you can just speak to a specialist, as I just said. Step number 4, boss, you want to file. So, how is independent contractor income paid and reported? Now, the thing you have to understand is that employees typically get paid on a consistent schedule, such as weekly, bi-weekly, or monthly. As an independent contractor, it's up to you and the payer to come to an agreement on when you will be paid and how that transaction will take place. For example, the payer may mail you a check, pay you via wire transfer, or send you payment through an ACH deposit or PayPal. So those payments are not considered a salary or wages for tax purposes because the vendor does not deduct taxes. That means no federal income taxes, Social Security taxes, or Medicare taxes are taken out before you receive the money. So be mindful of how you decide to receive the payments though, because some services like PayPal may charge a fee. So come income tax season, the payer is required to send you a Form 1099 NEC, so non-employee compensation, reporting all of the income they paid you the previous calendar year. So this Form 1099 NEC takes the place of a W-2, which traditionally employed individuals receive from their companies. So there is one exception to this rule though. If you earn less than $600, you still must report the income, but the payer does not have to send you a Form 1099 NEC. If you work, if you work with multiple people or businesses throughout the year, you may receive multiple copies of this form. So as a payer, you are required to have this completed and the payer, in other words, the companies you work for, they are required to have this completed and postmarked by the end of January each year. So to file your taxes, boss, what you can do is you can do things yourself, DIY, or hire a pro. It really depends on the complexity, how complex your taxes are. If you are debating whether filing your own taxes as an independent contractor or hiring a tax professional, you want to consider your business income and expenses. If you have a straightforward tax situation with few deductions, then it will be less expensive to use a tax filing software yourself. On the other hand, if your business expenses are complex, you have a high income or subcontract work to other independent contractors, it may be worth the investment to hire a tax pro to avoid any mistakes or errors in your filing. So when we talk about tax pro, we are speaking about an EA, an enrolled agent. We are speaking about a CPA, a certified public accountant. We're speaking about a regular tax filer, or we can also talk about a tax attorney. Step number 5, boss, you need to pay. So after filing, you have to pay, right? So how do you pay taxes as an independent contractor? Let's talk about that. So for tax purposes, the IRS treats independent contractors as self-employed individuals. That means you are subject to a different set of tax payment and filing rules than employees. You'll need to file a tax return with the IRS if your net earnings from self-employment are $400 or more. Along with Form 1040, you will file a Schedule C to calculate net income or loss from your business. So you can file a Schedule C Easy form if you have less than $5,000 in business expenses. And you also have to pay self-employment tax, which covers the amount you owe for Social Security and Medicare taxes for the year. So this is what it is. So for this year, the total self-employment tax rate is 15.3%. Okay, so this rate has 12.4% Social Security, the FICA, and you have 2.9% for Medicare. So when we talk about Social Security, this includes what? Old age, survivors, and disability insurance. So you can calculate your self-employment tax using Schedule SE on Form 1040. This is really important. Now, how do you pay taxes as an independent contractor? You have a lot of ways. You can go on the IRS websites. You have a lot of ways to actually, you can pay by credit card. You can pay via wire transfer. You have third-party platforms where you can actually pay, and if you want to avoid penalties. Now, you have to understand, in the United States, federal income taxes operate on a pay-as-you-go system, meaning you generally cannot wait until the end of the year to calculate your taxes and pay what you owe. Instead, the IRS requires you to estimate your tax liability and pay it throughout the year as you earn income. Okay, so that's where we talk about quarterly estimated tax payments. We have covered this on another show, and you also need to think about 1099 miscellaneous, 1099 NEC. So self-employment taxes, just think about that also. And one thing I also need to say about this is that you have due dates. So estimated tax payments are due on April 15th, June 15th, September 15th, and January 15th for the last quarter of the prior year. And if any of those dates falls on a weekend or a holiday, the due date shifts to the next business day. Very important. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are also having a conversation about how to file taxes as an independent contractor. So the thing is, the last thing, the number 6, you need to be punctual. So independent contractor tax deadlines. I've just given you the dates, so it's really important. So remember, you got to have those tax deadlines somewhere in your office. I don't care. You can have an app, you can have a reminder in your phone, whatever. But as an independent contractor, be prepared for additional tax deadlines. Now, in addition to your personal income tax deadline of April 15th, I'm talking here about your 1040, you will also have both federal and state quarterly tax deadlines. Okay. So I just said it. So you have April 15th, June 15th, September 15th, and January 15th. So don't forget that if your state has income taxes, you will also need to make estimated tax payments to your state. So you want to check with your state's business resources for deadlines and any required forms. So when we talk about your personal income tax deadline, we were speaking about your Form 1040 in addition to your Schedule C. So Schedule C is your profit and loss from business, and your Schedule SE, self-employment tax. Okay, if you cannot file for any reason, things happen, people have to make decisions. If you cannot file your taxes by the April 15th deadline, you should use Form 4868 to file for an automatic 6-month extension. But again, that's only an extension to file your paperwork. If you owe any taxes, you will need to pay them by the April 15th deadline to avoid being charged a penalty. Okay, this is really important. And one thing I also want to say here is that make sure that you check those things at the state and also county or city level. Okay, so if your state has income tax, you will be also required to file and pay your state income taxes. So again, make sure. Now, one thing I have to say, when we talk about being punctual, it's just a lot better to have a tax calendar at the beginning of the year. If you are an independent contractor, do not wait until the end of the year to start thinking about dates or even have reminders. No, a tax calendar should be part of your normal operational calendar. In other words, you know how you have to pay your bills by certain dates. You have to pay your vendors. You need to place orders. You need to finish projects. You need to talk to clients. All those things are kind of cool. And if you have a master calendar at the business level, at your business level, you want to include those dates that I just gave you, April 15th, June 15th, September 15th, and January 15th, onto that calendar so you can see them with reminders maybe 2 weeks or 1 month beforehand. Very important. The last thing I want to say here is we have a constellation of tips and hacks and tricks I want to give you. Now, remember, I want you to keep those pro tips in mind. So how do you file taxes as an independent contractor? Well, here are the common tax forms you could receive. Okay, 1099, 1099K, or a 1099 NEC. You will need to report information from these forms on your individual tax returns. Okay, now businesses are now required to send you a 1099K if you were paid more than $600 for goods or services. And so you need to think about your Schedule C Form 1040. Don't forget that. And so if you have a business entity other than a sole proprietorship or a single member LLC, you will need to file a business return instead of reporting your business income on a Schedule C. Examples include partnerships, Form 1065, and S Corporation, Form 1120S. So there may be other IRS forms you will need to file depending on the deductions you take. Now remember, if you file Form 1065 or Form 1120S, there are Schedules K1 that pertain to those specific forms. So for example, Schedule K1 of Form 1065 is different from Schedule K1 from a Form 1120S. Okay. Now the thing here is that when we talk about, so what if you work as an employee and an independent contractor? In other words, you have the hybrid. You have a hybrid situation. Now, These additional tax responsibilities will generally still apply. But the thing is, it has to depend on what kind of state you're in and what kind of situation you have in terms of your business. Either way, you still need to think about quarterly estimated, taxes, and also self-employment tax. This is really important. And so there might be some cases where, depending on the state you're in, you might have to do things a little differently. But long story short, always think about those two things that I just mentioned: self-employment tax and quarterly estimated taxes, because the IRS wants to get paid. All right, because you're not being taxes are not being withheld from your paycheck. So because you're not an employee, you're just getting the full amount of your salary, and taxes are not being withheld. So the IRS is not getting their fair share of your salary every 2 weeks. So all they're asking you to do now is to file some paperwork at the end of each quarter, so that you basically just send the IRS their fair share of your income, and that makes sense. And if you do not send them your fair share, you might actually incur a fee, a penalty, okay? And you certainly don't want that. And one thing I also want to say here is that if you are, let's say, if you are an independent consultant or a distributor for a direct sales or multi-level marketing company, you are also required to report your income on Schedule C, Form 1040. And this is important. Now, one thing you need to really remember here is that self-employment tax has two taxes: the FICA part of it and the Medicare part of it. Now, if you have made it so far, here is the surprise that I had for you. You will love it. We have an illustration that really will go deep and trying to explain to you what you need to think about. So here we have independent contractor taxes. We have an example. So how does calculating your own independent contractor taxes work? So let's say during the year you earn $50,000 as an independent contractor working with two companies. Okay. So these are your only jobs, and you're not an employee anywhere else. So you should receive a 1099 NEC from each company confirming how much they paid you during the year. So I want you to look on the screen right now. Here is the first NEC Form 1099 NEC that you received. That's the first form. And here is the second Form 1099 NEC. So those two forms, when you add up the number, the salaries you get $50,000. Okay. So what's going to happen here is you will include this income on part 1 of your Schedule C. So $50,000 on part 1 of your Schedule C. Look on the screen right now. Here is Schedule C, and the part 1, as you can see, that's gross receipts or sales. Okay. So you have that on that line, $50,000, and basically this is also your gross profit on line 5. And this is also your gross income on line 7, because there are no intermediary numbers in between. So now in terms of expenses, and here we have, so those are hypothetical numbers that I wanted to share with you for purposes of the calculation. So we put advertising $500, car and truck expenses $1,000, commission and fees $350, insurance $650, other $250. Okay, we have legal and professional services $750. So you can see that when you add up, and we have office expense $2,500, vehicles, machinery and equipment $1,000, repairs and maintenance you have $800, supplies $200, you have travel $350, and we have utilities $150, and we have other expenses $250. So when you add all those things, when you add all the expenses, your total expenses are $8,750. So your provisional profit or loss is $41,250. So you actually subtract $8750 from 50,000. Okay, so this is the same thing you have on line 31, net profit or loss. And now the self-employment tax. So here is the self-employment tax. So you have your 41,250, and if you multiply, if you remember, I was just telling you about the 92.35%. This is what it is. If you actually multiply that, if you multiply the 41,250 by 92.35%, you get $38,094. And basically what's going to happen here is that you actually put the same number on line 4C. The same on 4A, you put the same number on line 4C. And here you put the same thing on line 6. Now remember here, so if you go on line 9, you have to put what the IRS told you to put, 142,800. And you multiply to get what we have here. You have to multiply what you have on line 6, the $38,094. You have to multiply that by 12.4%. Remember, that's the FICA part of things. And you have to multiply the same line by line 6 by 2.9%. That's the Medicare part of it. So here you have the amounts. So your self-employment tax is basically 12.4% of line 6 plus 2.9% of line 6. You add those two. So this is what I was just talking to you earlier about, when you basically take your gross income or your net income and you multiply that by 15.3%. So if you do that, if you multiply $38,094 by 15.3%, you get $5,829. Okay, and then you continue here. You can see here that so here, part 2, here we are on Schedule 1. Schedule 1, what you want to do here is that you basically want to put on line 15, deductible part of self-employment tax. You want to put what? You want to put 2915. What is 2915? Anybody remember it? The 2915 is basically one half of your self-employment tax. Remember, you have to deduct one half of your self-employment tax. So if you divide 5,829 divided by 2, you get 2915. Actually, you get 2914.5, but we need to round the numbers here, so this is why we have this. But this is a pure illustration of how things really work in real life. When you start calculating stuff, that's when you realize that, hey, listen, you basically can save a lot of cash. But again, this is how it is. If you are an independent contractor, this is how you file your taxes, and these are the forms that are involved in tax filing for independent contractors. Okay, and the bottom line is, remember, you need to pay self-employment tax, and you need to make sure that you send the IRS estimated tax payments every quarter. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just explaining to you how to file taxes as an independent contractor. So first, the steps here: ascertain, write off, estimate, file, pay, be punctual. Punctuality is really important, and remember. And we just closed up pretty nicely with the review, and so that's it. Thank you so much for your attention. God bless you. I'll see you next time. But until then, remember, stay marvelous.